Hey, Loan Atlas family, Josh Mettle here, and I'm here with my good friend, Marc Bui. Good to see you, my friend. And how you doing today?
I'm doing well, Josh. How are you?
I'm doing great, man. And I was really interested in how you are leveraging what's happening in mortgage rates with the technology to gain more clients and close more loans. So I'm excited to dig into that with you today. Before we go into the strategy that you're going to share with us, I just heard from Dan Habib on Tuesday of this week, and he was basically talking about tariffs and the Trump effect and everything that's happening with the Treasury and kind of and Doge and kind of the Trump impact on slowing the economy, reducing the inflation rate. And of course, we know that's great for mortgage rates. So aligned with his basic prognosis or forecast for 2025 dovetailed to what he said earlier in the year. He was thinking that we're going to get into those low sixes, potentially even high fives before the end of the year. But he put a really interesting point on how the things that the Trump administration are doing are becoming a tailwind for rates, meaning pushing rates lower. I believe I heard the number was there's something like $9 trillion in Treasury bonds that have to be refinanced by the US government between the beginning of the year and the end of June. And the Treasury is doing, and the Trump administration is doing everything possible to reduce rates before all that debt has to be refinanced, which is great for us in the real estate and mortgage market. So with that kind of framing on the direction of where mortgage rates are heading, how are you capitalizing and using technology to take advantage of this, Marc?
Well, dude, first and foremost, I can't wait to see that webinar. And contrary to what the media pushes out in terms of like the tariffs and what it's going to do to inflation, I love this spin, right? So I'm excited, and I think that the entire industry has been waiting for rates to come down for the last 24 months. And we know it's going to happen. We want to get ahead of it. Not many people are getting ahead of it, quite frankly. People in the Atlas community are. So like me, I keep several spreadsheets, right? But one of the things that I've been really leaning on is MBS Highway. Speaking of Dan Habib and Barry, but leaning on their strike rate feature. They announced it, I don't know, roughly about 6 months ago or a year ago. I don't remember exactly when, but it's dawned on me that not a lot of originators are taking advantage of this feature, and it's fire. So
I'm excited for you to show that, and also I think you mentioned that since employing this strategy, you've already had some success. So do you want to, before you get into the strategy, just tell us a little bit about a case study or someone you were able to help because of this strategy?
Yeah. So John Phillips was on my strike rate as a client that I should reach out to. So I had all his information on MBS Highway. I created a TCA using Mortgage Coach. I recorded a video, a screen share video using Vidyard. I sent it over to him and his wife. They responded back with some questions. We scheduled a phone call. He just messaged me right now before our call asking to speak at 12:30 today. Hopefully he's going to pull the trigger on a refinance. But that's somebody that I would have completely overlooked.
I love it. Those are the strategies that I like, not something just to keep us busy, but something that we're actually getting deals from. So let's jump in. Feel free to share your screen and take it away.
Okay, awesome. Cool. Can you see my screen?
Gotcha.
Awesome. All right. So when you guys log on to MBS Highway, simply hover over the Loan Advisor tab and click on Strike Rate.
And then you have to spend dozens of hours putting all your clients' info in here, right?
That's the best part about MBS Highway strike rate. I didn't do any of this. Like, it's basically pulling recorded records. And as you can see, like, I set my parameters, right? Early payoff period of 6 months because I don't want to suffer from an EPO. I might change this to 4 months because it'll give me a 2-month buffer to start the conversation with people. I think that's a smarter approach. And then you can select or set your interest rate delta meaning loan amounts up to $350,000. I want to see a 1% rate benefit, if not better.
Yep.
I have it set at a quarter here for this loan amount range of 350 to 805, and then an eighth, only because I want to see more names so that I can be they can be top of mind for me. So
Hey,
yeah,
let me show you one more quick thing on this, Mark. I was just working with another Loan Atlas member who was using this strike rate factor, and they had very low margins there set too. And the reason was they wanted to have lots of alerts come through their email. So when they're on a Zoom with a client, they go in to their deleted email and type in strike rate, and they can see, then they tell their clients, look at all these strike rates that have triggered and all these folks that I'm monitoring their refinance. So it's like, that was really, and it was just like, and you could see the client's face like, you're managing all those mortgages. He's like, we're notified instantly if there's an opportunity to save you money. It was really impressive. So that's just another little nugget that I learned today.
I love that, man. Thanks so much for sharing. I'm going to swipe and adapt for sure. So yeah, as you can see, I mean, there's just pages and pages of potential refinance business, right? That we can go after. And to your point earlier, Josh, the best part is like I spent zero time entering the data. Like it's just there. So if you guys haven't like linked up your strike rate with MBS Highway or turn on that feature, it's a no-brainer. Definitely.
And you can just use the go through MBS Highway. You can email customer support at MBS Highway. I think all you need to have is your NMLS number correctly in there, and it should automatically be in there. Mark, how do they, because I know the interest rates aren't exact. It's based on national averages. So how do you edit the interest rate if that's not the exact interest rate you close the client at?
Well, I don't really care about editing the interest rate in the here. Like it was just like, for example, Helen Dane. I know her rate is somewhere around the 7 1/8 mark, right? From here, I go into my CRM, and then that's where I have like her actual loan data, and then I can build the TCA accordingly.
Got it. Because it's close enough. You found margin of error is so minimal. You just want the alert.
Exactly.
Makes sense.
So from here, I'll jump into Mortgage Coach, build out a TCA. And when I do my TCAs, like I try to get as accurate as possible, meaning I want the original loan amount, I want the first payment date, I want the interest rate, I want, if they have an impound account, I want to make sure I have accurate taxes and insurance so that when I propose their strike rate options, it's the numbers are solid, right?
Yeah.
So I'll share with you a video that I recently sent out. Give me just 1 second here. Okay. So John and Alex Phillips were on the list. I went and created a TCA for them. And here we go. I just want to make sure I have my audio share.
Yeah, I can see your vidyard there.
Okay, let me click on share sound. Hey, good morning, guys. I hope you're well. Hope you guys had a great weekend. Thanks so much for reaching out to me. I went ahead and repriced your scenario. I did so last Friday, and it improved a little bit again today, which is great news. So let's go ahead and go through these options here. So this is your current scenario. This is using the note rate of 7.99%. When your loan matures at the note rate, your estimated housing payment should be roughly $53.90 per month. Option number one is a 30-year fix based on today's pricing at 6.5%. I'm using an estimated loan amount of $723 to cover closing costs, prepaid items, etc. It's just an estimated number for now. Your new estimated housing payment should land somewhere around $45.69.85, which is a savings of about $820 a month compared to where your note rate payment will be.
Huge.
Which is a decent savings. And then this here has, it's a 0-point loan. So basically it doesn't cost you any additional fee to buy down to this interest rate. and you're not getting a lender credit, right? Closing costs will be financed into the loan amount. Option number 2 is locking in at a rate of 6.625. This does come with a little bit of lender credit to help out with the closing costs. That's why the loan amount is $720,000 instead of $723,000. A monthly payment estimated at $4,610, so roughly about $50 higher. But your loan amount is less. If you click on the more info button here, you'll see the breakdown. This is the principal and interest line. Right now, you currently have a little bit of mortgage insurance, and your new monthly payment is here, principal and interest. If we click on the closing cost tab, you'll see a high-level overview of the estimated closing costs, which are these 2 line items here, finance into the loan. And then if we click on the fee detail hyperlink, you'll see down here there's an estimated lender credit of about $2,880 to help pay for closing costs. So this is based on today's pricing. As you are aware, rates can change daily. Let me know if you have any questions, but I wanted to get this over to you for review. And if you have questions and you want to chat, let's jump on the phone to discuss. All right.
Awesome.
So normally I go into like more detail. I'll have like an early payoff column too, Josh, just to show them like how quickly they can pay off their loan if they were to apply the monthly savings. I kind of rushed this one, so I didn't include that. But I knew that the monthly savings were pretty significant, that it kind of sell itself.
Yeah.
But yeah, so we've been communicating ever since over the last couple of days, just with this video, right? Phone calls, text messages, and I think they're ready to move forward, hopefully today with a rate lock.
Outstanding. All right, so let's bring down your screen for just a second if we can, and then let's go back to the steps here to make this really simple for people to execute and have success with. So number 1, make sure you've got your NMLS number inside of MBS Highway. If you do, then you should be able to go into Loan Advisor across the top and then over to Strike Rate, and you're going to see a whole list of all your loans. The first thing you want to do is you want to set your margin. In other words, it'll feed in here 30-year average, FHA, VA, jumbo. So it's going to give you averages based on Fannie Mae and Freddie Mac mortgage rate averages. So you're going to you want a trigger or a strike rate, a notification at what delta between the average rate and where we are today. I love the advice from Mark, skinny up those margins so you get lots of notifications. You can start having those conversations early. I think that's brilliant. If you want, you can go in and you can edit the rates on those loans. If you have hundreds of loans like Mark, that might not be prudent. But if you don't have hundreds of loans, or if you have an assistant that can do it, maybe they could even go in and edit the rate so that it's exactly matching. And then as you get those notifications coming through to your email, and when you have big swings in the market, you'll have days where you're going to get, multiple emails like that. Then you're just immediately creating a TCA, showing them the options, filming a vidyard, and then are you texting that? Are you emailing that? What's your follow-up sequence with that client?
I'm emailing that over to the client. Sometimes I'll follow up with a text message to just make sure that they received it, but I miss one step. Obviously, it's going to take me a lot of time to create TCAs for everybody, right?
Yeah.
On the rate alert, because my margin is so skinny. What I do is I send them a voice text. I'm like, hey, John and Alex, this is Mark. Just want to let you know that I've been watching the rate market for you guys to identify potential savings opportunity through refinance. The market's been moving in a very positive direction for interest rates. Let me know if you're interested in seeing some numbers. They fire back. That gives me the okay to invest some time in creating the TCA in the vidyard.
Great clarifying point there, Mark. Yeah, why not engage the people who are interested and are in the saddle and ready to do round 2 with you? Great point. Man, this is a great strategy. I could see the potential blockers for people in their mind is, I don't know how to use Mortgage Coach. What would you say to that person who says, I've never taken the time to learn Mortgage Coach?
This is your business, right? If if you were a carpenter, you're going to take the time to learn how to like create really cool stuff with wood. Like if you're, this is our business. We have to take the time to invest, to learn, to practice. And that's how we can show up greatly for our clients. And that's how we can show up and serve greatly for our clients.
Such a great way to, it's a great perspective. Thank you for that. Yeah. My answer is going to be just, it's time. Like, the number of originators who are going to be put out of business because their value proposition is rate, speed, and we can close on time. I'm sorry, but we just saw what Rocket did, $1.75 billion purchase to acquire Redfin. That whole construct of that partnership is to reduce the cost of getting into a home by 50% by reducing the real estate fees and the mortgage fees. Like, you're not going to be the cheapest. It is time to get to be the best and have the best advice and show people things that they can do with the savings of their money, pay their loan off faster, invest it so they can build more assets. Like, that is the only mortgage originators that I believe are going to survive the next decade. So, Marc, thanks for coming on. And I mean, what an easy strategy that puts you back in a relationship with your customers, showing them you care, giving them advice, showing them that you're 2 steps ahead of where the market's going to be. So home run, buddy. Appreciate you sharing so generously with us today.
Absolutely. My pleasure.
All right, team, get out there and execute. You heard it here. The genius is always in the execution.